Good morning, friends. In this video, we will go through Accounting Standard 16, borrowing costs. Let's try to understand the scope exclusions. This standard does not deal with the actual or the imputed cost of the owner's equity, including the preference share capital, which is not classified as liability. Okay, so we are not going to consider anything on the cost of the owner's equity. Okay, so what are borrowing costs? These are typically borrowings, loans which we take. Borrowing costs are the interest and other costs incurred by an enterprise in connection with the borrowing of funds. So if you're borrowing money, right, there are some costs which are attached to that. What is it? Interest and other costs which are incurred by an enterprise in connection with the borrowing of funds. We know what is interest. It's very familiar. What are other costs, right? So we need to be very clear on the other cost element also. These are the inclusions in the borrowing costs. Interest and commitment charges on the borrowings. Amortization of discounts and premiums which are related to borrowings. Amortization of the ancillary costs incurred in connection with the arrangement of the borrowings. Finance charges in respect of assets acquired under a finance lease. They're all part of other costs. The last one is very important from an exam perspective. Even exchange differences arising from foreign currency borrowings, to the extent they are regarded as an adjustment to the interest cost. What is that adjustment? So what they say, if you have exchange differences, one portion of the exchange differences will be accounted for under AS 16 as borrowing cost. We all know under AS 11, the exchange differences are handled. But what is this? So one portion of the exchange differences will go to AS 16 and the remaining portion will go to AS 11. So what is that level? Right? To what extent of the exchange differences will be accounted for under AS 16? That is the question. They say exchange differences on foreign currency borrowings to the extent of the difference between the interest on local currency borrowings and the interest on the foreign currency borrowing, they are considered to be the borrowing cost under the standard. So if you are going to borrow, let's take in dollar, right, which is a foreign currency. So had you borrowed the same money in terms of INR, right, you would have paid an interest cost under the INR. Now that you're borrowed under the dollar, you will be paying an interest under the USD. So what is that difference? Right, the difference of the interest cost between the local currency borrowing and the foreign currency borrowing. To that extent, right, that will be considered as a borrowing cost. So exchange differences, so that portion of the exchange differences, right, which relates to the difference between the interest on the foreign currency borrowing and the interest on the local currency borrowing, will be considered to be borrowing cost. The remaining exchange difference will be accounted for under AS 11. Okay, very important. Let's take an example to understand this. This is the problem or a situation. XYZ has taken a loan of USD 10,000 on April 1st, 2000 X3 for a specific project at an interest rate of 5% per annum, payable annually. So this is a foreign currency loan, $10,000, right, at 5%. On 14X3, the exchange rate between the currencies was 45. So on the date of taking the loan, the exchange rate was 45. Now, at the end of the year, 31st March X4, it is actually 48. From 45, it has gone up to 48. Now, had you borrowed the same money in India, the corresponding amount that would have been borrowed by XYZ in the local currency at an interest rate of 11% per annum as on 14X3. So same date on 14X3, had you borrowed the money in INR, which is local currency, you would have paid 11% interest. This is a case study, right? So let me summarize. So you're borrowing actually $10,000 on 14X3 at 5% interest, right? The exchange rate on that day was 45. Now, end of the year, it has become 48. Same day, 14X3, right? That is the date on which you actually borrowed USD 10,000. Had you borrowed in Indian currency, the interest rate is 11. So how do you actually work out? Now, let's look at the end of the year, when you pay the interest on the foreign currency loan, $10,000 is the loan amount, 5% interest per annum. So it is actually 10,000 into 5%. That multiplied by 48. Why am I doing 48? Because that is exchange rate at the end of the year. So you would have paid 24,000. That's the interest incurred for the period is 24,000. Right? Okay. Now, what is the interest that you would have paid had you taken the loan in the Indian currency? the same loan, had you taken in Indian currency, the same $10,000, the exchange rate on that day was 45. That's a third step. 10,000 into 45, you would have paid 11% interest, which is 49,500. Right? Just compare it. So the first step is interest on the foreign currency loan is $10,000, 5% interest, and end of the year you pay that interest, which is 48 rupees. So you would have incurred 24,000 as interest. Now come to step number 3. $10,000 is the total USD loan. Had you taken this in INR, you would have taken 4,50,000 into 11%. That is 49,500. So what is the difference between the interest on the local currency or the Indian currency borrowing and the foreign currency borrowing? That's a difference of 49,500 minus 24,000, which is 25,500. Right? That's the difference in the interest. Okay. Now let's look at the foreign currency borrowing in principle. You borrowed 10,000. The exchange rate was 45. Now at the end of the year, it has become 48. So don't you feel that there is an exchange difference of 3 rupees, which is 30,000. So 10,000 into 3, right? The liability is going up 30,000. Now the question is, how do we deal with this 30,000? They say out of this 30,000, 25,500 will be accounted for under AS 16 and the balance 4,500 will be accounted for under AS 11. Right? The exchange difference is 30,000. How? From 45, the exchange rate moved to 48. So increase of 3. So $10,000 into 3 is 30,000 rupees is the total exchange difference, right? So out of this 30,000, one portion, which is 25,500, that will be accounted for under AS 16 and the balance 4,500 will be accounted for under AS 11. So how did we calculate that 25,500? It's a difference between 49,500, which is the interest on the Indian currency borrowing, and the interest on the foreign currency borrowing, which is 24,000. Hope it is very clear. Let's take another example. That's exactly what I have spelled out. Therefore, out of 30,000 increase in the liability towards principal amount, only 25,500 will be taken as borrowing cost. Right? The balance 4,500 will be accounted for under AS 11. Okay, so if someone is going to ask you what is the total borrowing cost, it is actually 49,500. That's nothing but the 24,000, which is the first line, interest on the foreign currency loan, plus the exchange differences of 25,500. So that will be 49,500. Okay. Now, if I do a similar problem in the above example, if the interest rate on the local currency borrowing is assumed to be 13% instead of 11%. Now, in the last problem, we assumed to be 11%. Now, if I assume it is 13%, the answer would be slightly different. Now, what is the exchange difference? It is just 30,000, correct? There is no difference in the exchange difference. From 45, it has become 48. So 3 rupees. So 3 rupees into 10,000 is $30,000, 30,000 rupees. That's the entire exchange difference. But how are we going to account for the exchange difference? Now we need to compute, right? They say the entire exchange difference of 30,000 would be considered as borrowing cost, since in that case, the difference between the interest on the local currency borrowing and that of the foreign currency borrowing, right, it is 34,500. So you can actually work out. If you work out what is the interest on the local currency borrowing, you will get 58,500 because it is not 11%, it is 13%. So if you work out 4,50,000 into 13%, you will get 58,500 minus 24,000, which is the interest on the foreign currency borrowing, which is 24,000. If you see the difference, it is 34,500. But if you see the entire exchange, it is only 30,000, right? So we need to account the entire exchange differences of 30,000 under AS 16. Okay, so that is very important. So what is the total borrowing cost now? It is 24,000, which is the interest on the foreign currency loan, plus 30,000, which is the exchange differences. So the entire 54,000 will be under AS 16, which means no exchange difference will be accounted for under AS 11. It's a very important example. Kindly go through these two examples again and again so that you appreciate how do you deal with the exchange differences. One part goes to AS 16, another part goes to AS 11. That's the first example. But in the second example, the entire exchange differences has been accounted for under AS 16 and not under AS 11. Okay, so that's important. Okay, now what is the accounting treatment which is suggested for the borrowing cost? Right now, very important, Borrowing costs which are directly attributable to the acquisition, construction, production of a qualifying asset should be capitalized as part of the cost of the asset. When I say qualifying asset, so not every asset qualifies there. So when I say qualifying asset, it is a specific asset. So borrowing costs which are directly attributable to the acquisition, construction, production of a qualifying asset should be capitalized as part of the cost of that asset. Then what about other borrowing costs? You take it as an expense. Other borrowing costs should be recognized as an expense in the period in which they are incurred, which means it will be taken to P&L account as an expenditure, which means out of the total borrowing costs, only those borrowing costs which are relating to the acquisition, construction, production of a qualifying asset, that can be capitalized and added as part of the cost of the asset. The remaining borrowing costs should be taken to P&L. Okay. Now the question is, sir, what is a qualifying asset? How should I determine that? Simple. A qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. So what is that substantial period, sir? Ordinarily, a 12 months period is considered a substantial period of time unless a shorter or a longer period can be justified on the basis of the facts and circumstances of the case. So very important, what is the criteria for qualifying asset? An asset that necessarily takes a substantial period of time to get ready for its intended use or sale. That is called as qualifying asset. So then what is substantial period, sir? Ordinarily, a 12 months period is considered to be substantial, but sometimes if it can be shorter or it can be a longer period also, but that you have to justify on the basis of the facts and circumstances of the case. Okay. Now, sir, how much to capitalize? Very important. So when it's a time to really classify the borrowings into two types. One is generic borrowing, other is a specific borrowing. So what is a generic borrowing? For example, you take 4 loans and you do not know, or you are not attaching, or you are not earmarking a particular loan to a particular asset, right? These are general borrowings. You got let's take from SBI you've taken a loan, from Dena Bank you've taken a loan, from Punjab National Bank you've taken a loan. 3 different loans you have taken, and you are not attaching any specific property or an asset for a borrowing, for a specific borrowing. So you may use these borrowings on a very high level generic purpose. These are called general borrowings. When I say specific borrowings, you earmark, you know this specific loan is earmarked for this particular asset. These are specific borrowings, right? Why this classification is important? Because the treatment of the borrowing cost is heavily dependent on the nature of the borrowing. If it is a specific borrowing, then the actual borrowing cost less income on temporary investment of these borrowings, that should be capitalized. Okay, because if you know this particular loan is for a particular plant and machinery, then the actual borrowing cost incurred less any income on the temporary investment of these borrowings should be capitalized. Why am I reducing the temporary investment? For example, I've got the loan from the bank, but my project has taken some time, and maybe it's going to start after 4 months only. So why to keep these funds idle? I may make a temporary investment for about 4 months, and until that point of time, it may generate some income for me. So that will go to reduce the actual borrowing cost. That is in relation to a specific borrowing. But if the borrowings are generic borrowings, you have to be careful. Then you have to arrive at a capitalization rate. Because let's assume I got 3 loans, one at 10%, other at 10.5%, other at 11%. So which loan should which is the interest rate I should consider? Which means you need to consider a weighted average rate, which is called a capitalization rate. So when I say capitalization rate, it means a weighted average rate of the borrowing cost outstanding during the period other than the specific borrowings. They should be applied to the expenditure on the qualifying assets. So even though you got 3 different loans, one at 10, other at 10.5, other at 11, you should arrive at a weighted average rate, and you should apply that rate on the expenditure which is being incurred on the qualifying assets, right? That is important and very important. Since you are applying a weighted average rate, you should also take care to ensure that the total interest which you are capitalizing should not exceed the actual borrowing cost, because you have actually borrowed at 10, 10.5 and 11. So there is always a actual borrowing cost, actual interest cost which you will be paying. So you should ensure that whatever rate you are actually capitalizing, right, or the capitalization rate, the interest component of that should not exceed the actual borrowing cost, right? For example, if the interest on 3 loans is, let's take it is 50,000 rupees, you cannot apply a capitalization rate and arrive at a number of let's say 55,000 as borrowing cost, because the actual interest cost which you pay is only 50,000. But you cannot say the weighted average rate is, maybe it's around 11 and I will pay 55,000 as borrowing cost, because this is just for the sake of to ease the computation part. But you should also take care to ensure that the amount capitalized should not exceed the borrowing cost actually incurred during the period. Okay, so the story here is very simple. If it's a specific borrowing, you can apply the actual, you can take the actual borrowing cost, unless you have to subtract any income on the temporary investment of these borrowing costs. Whereas if there is a general borrowing, then you need to arrive at a weighted average borrowing rate, capitalization rate, and then you need to apply that rate on the expenditure incurred on the qualifying assets. But take care to ensure that the amount which is getting capitalized does not exceed the actual interest cost which you actually incurred during that period. The next important area is when to commence, when to suspend, and when to cease the capitalization. Right? That's very important. So, okay, sir, I understood everything. But when should I start the capitalization? When should I suspend, which means I should stop it temporarily, and when I should cease, when I should stop permanently. So there are 3 areas to be discussed. Let's talk about commencement. When should I commence the capitalization? All the conditions to be satisfied. Number 1, expenditure for the acquisition, construction, production of a qualifying asset is being incurred. So you are incurring an expenditure for the acquisition, construction, production of a qualifying asset. That's number 1. Then you are actually incurring the borrowing costs. Borrowing costs are being incurred. So that's number 2. Third one, activities that are necessary to prepare the asset for its intended use or sale or in progress. So these 3 conditions are important to commence or to begin the capitalization. When do you suspend? During extended periods in which the active development is interrupted. See, you may encounter a situation. Let's take, for example, you are constructing a bridge, right, across a, let's take kind of in the midst of an ocean, and that particular season you may have high tides, right, during that season in that place. So it will be very difficult to do the construction at that point of time, right? Even though you are ready, but the environment around you is not conducive to do the production. So what do you do on the construction part? So what do you stop it temporarily, right? That's called suspension. So just because you are suspending it, one cannot say that I will not capitalize the borrowing cost. Okay. So whenever active development is interrupted, only that period you need to suspend it. That's important. Otherwise, if there is only a temporary delay, like in my example, I said that you are constructing a bridge, right, over in a sea, and maybe that for 10 days period or 15 days period, you have high tides in that area. You need not suspend the capitalization in that phase. It's only, you need to suspend only during the periods in which the active development is interrupted. It should be a genuine interruption, right? If there's only a temporary interruption, then you need not suspend the capitalization. That's the essence of the standard. Now, when do you cease the capitalization? When substantially all the activities necessary to prepare the asset for its intended use or sale are completed. The standard uses the word substantially. When substantially all the activities necessary to prepare the asset are completed. Almost it's 85% done, 90% done, only some small work is pending. Then you can cease the you can stop the capitalization. Similarly, when the construction of a qualifying asset is completed in parts and a completed part is capable of being used while construction continues for the other parts, capitalization of the borrowing cost in relation to a part should cease when substantially all the activities necessary to prepare that part for its intended use or sale are complete. Let's take, for example, you are erecting let's take buildings, four commercial buildings. And if you feel, say there are 4 blocks or 4 building blocks, if you complete block number 1, right, and if you feel that block number 1 is complete in all respects, then you can stop the capitalization relating to block number 1. That's what they say. And you can continue the capitalization for block 2, 3, and 4. But for block 1, you have to stop the capitalization. That's what they say. Okay. Now, what are the various disclosure requirements as per AS 16? The accounting policy adopted for borrowing costs. What is the accounting policy you have adopted for the borrowing cost, and what is the amount of borrowing cost which is capitalized during the period? So these are the 2 important things which we need to disclose as part of the standard. Okay, so that marks the end of the video. Very important standard. Kindly go through this video again and again. You get 1 question surely in your exam. Thank you.